And so today the topic, as we said, is Bitcoin and crypto-centered retirement plans and the specific structure that everyone on this panel has had their involvement in putting together their little piece of financial innovation that we've now finally been able to plug all together. And so when we sent out the email and the introduction to this, we talked about that we've been working on this product for over a year now. But really, it's been a decade in the making since Bitcoin launched and all the innovation that's happened since then. And really what was happening before Bitcoin as well, finally has all come together. And so we've got, some of the pioneers in our industry that are on this panel right now. So I'm just going to give a quick intro to everybody and our involvement. And then we'll do a bit of a backstory, and everyone can share their part in this piece as well. So we got Adam Vaziri here. So Adam is a board advisor at Bank to the Future. He's also the first crypto and Bitcoin specific lawyer that I ever met. Way back in, I think, 2012, we first started working together on Bitcoin and crypto legal work. Adam has had an instrumental role in the structuring of putting together this product as well. We got Vincent Chock here as well. And Vincent is the CEO and co-founder of First Digital Trust. First Digital Trust have been putting together, working on custody and trust as a regulated company, trust and custodian company. They put together very, First Digital and crypto specific trust structures. So they were an obvious choice for us when we were looking for a partner. And needs no introduction, Alex Mazinski, who's the CEO and co-founder of Celsius Network. Celsius were one of the most popular funding rounds on Bank to the Future when they offered their equity to our community and their community, and really a pioneer and innovator in the space of collateralized lending and yield in the crypto space that has now become a multi-billion-dollar industry. And Alex has been working on that right from the beginning of the yielding and collateralizations side of the industry. And obviously myself at Bank to the Future, we were the world's first crypto securities business. We've been funding companies like Kraken, like Celsius, like Coinbase, Bitfinex, Bitstamp, over 100 others. And we now have 150,000 investors that have the opportunity to invest almost $1 billion in equity of the largest companies in crypto. Now, we've had a very busy time recently because all of the companies are getting bigger and bigger and bigger and bigger. And really our statistics are doing incredibly well versus venture capital in this industry at the moment. So we're really happy about where the industry is going. And we were almost happy for a little bit of a breather. Crypto gave us a bit of a breather. Looking forward to a correction in the market just to try and catch up with ourselves. But it looks like crypto doesn't really give us much of a rest. So that brings us to where we are today. So the backstory, before I introduce the panelists and they can share their piece in terms of the innovation that they've been bringing to market and working, is we started to analyze, particularly when this pandemic broke out, what was the best service that we could bring to the market? What is it that our investors needed? And having analyzed over 150,000 investors over the last decade, and also having worked with many of the companies that have built companies, now they're many of them billionaires, most of them multi-millionaires, from investing in this industry or building a business in this industry, we were looking at what is the similarities and what do they have in common. And so when we sent the email out today, we talked about the 7 things that we've seen as a common factor in those that have become really crypto wealthy. The first thing is that they do things really simply. There's a tendency to want to get overcomplicated in crypto because the innovation is so great. But the first thing is that they all hodled Bitcoin and they didn't get too distracted with that. The second thing in common is that they all had exposure, simple exposure to the growth of DeFi, NFTs and everything just by hodling ETH. And so, if those industries are all built on ETH and in Ether, then just hodling Ether was the second thing that they all had in common. The third was that they have recently started to explore some of the yield opportunities so that they can have compounding. They're not taking all of their wealth or all of their Bitcoin and putting it in, but they're taking a percentage of it and exploring the compounding effects that they can have to try and get more Bitcoin, more ETH with that, and taking a percentage on that. The next is that they either started a business or they invested in companies and they own a portfolio of shares in the companies that are building this industry. The next thing is that they focused on how to put together their own asset protection structure. So they really thought about the structuring and how they want to hold their assets and how to put that together. They also got very clear about the tax situation. Obviously that's evolved. And so having clarity on how to account for these things and how to simplify the tax situation was one of the things that they all had in common. And the final thing, the seventh thing, is that they all bought regularly. So rather than trying to time the markets, while some are more complex and they had trading and algorithm and all sorts of stuff, but the simple ones were that they just regularly bought, dollar cost averaged, and bought all the way, so that when the markets crashed, they benefited from better prices. And when the markets did well, they were riding the market all the way up. And so you can take those 7 simple factors, look at everyone that's crypto wealthy, and the majority of them implemented some of that. They may have got more complex, but the simple things was allowed them to do that. And so when I wanted to build a retirement plan in the industry, we wanted to put together and assemble a team and put together all the parts that could achieve that and make it automated and simple for everybody. And in came Retirement Plan B. So that's where I want to turn over to the panelists right now, and everyone can focus on their respective bits of innovation that they brought to market. And so the first thing really is structuring. And so when you think of a retirement plan, you're normally thinking of a structure, and we wanted to create a structure that would be accessible to the most number of people without having to go, specific into, for example, in the US, you may have, IRAs and 401ks and stuff. We wanted to create a structure that could be owned by, different government issued initiatives and various things globally. And so we really wanted to start with the foundational, how could we build a structure that really simplifies, meets the goals, can hold those crypto assets, can generate yield, can also have an asset protection structure, and can simplify the area of understanding the treatment of tax in a very, very complex area where lots of governments around the world are looking to get their piece and collect tax on it.